Hey everyone, it's Coram and Shreve here with a look at the stock market for Thursday, May 4th, where we saw stocks reverse lower on renewed banking fears, and we saw a lot of wild reactions to earnings today as well.
Yeah, it's just market volatility is getting pretty extreme. It just feels like a market where we're starting to see more distribution days, more signs of institutional selling. So definitely an elevated risk level out here. But got two nice earnings gainers today to talk about. Two good stocks for the watch list: Shopify (SHOP) and also imaging diagnostics firm Lantheus (LNTH). And gold stocks continue to perform well amid the weak U.S. dollar. So take a look at Agnico Eagle Mines (AEM).
Let's do it. But first, let's take a look at the major indexes. The Nasdaq down 0.5%, so the least damage there. We had the S&P 500 down 0.7%, the Dow down 0.9% today, and the Russell 2000 down about 1.2% headed into the close. So as you can see here, it's looking like we're seeing continued rejection around those recent highs, not only for the Nasdaq but for the S&P 500 as well, Ken.
Yeah, and now it's just going to be a matter of if the Nasdaq is going to test that red line there, the 50-day moving average. Index traded in a pretty tight range today, so it wasn't hugely volatile. And you see after two straight distribution days on Tuesday and Wednesday, looks like we got lower volume today. So that's a silver lining. The Nasdaq avoided a distribution day, but a lot of growth stocks out there still look quite vulnerable, and a lot of them trade on the Nasdaq.
Mm-hmm. And let's also take a look at the S&P 500 as well here, getting rejected right around 4190, 4200, and headed back towards its 50-day line.
Yeah, so this is really just a question now: is are the Nasdaq and the S&P 500 going to find support at the 50-day moving average? So I know a lot of the bears out there are saying it's only a matter of time that the S&P 500 is going to retest that low around 3,800. That may or may not happen. What we know right now, though, like I said, is that we're seeing a market that's under increasing signs of distribution. So just gotta play it close to the vest here. Favor a good cash position, and you might take advantage of an opportunity here or there. It is a true stock pickers market, but
Oh yeah.
yeah, market tide definitely seems to be flowing a bit negative right now.
It does. It's been quite a difficult market as of late, and it seems like that difficulty has been pronounced this week with the explosions in earnings, up and down. Stocks imploding or exploding higher. Seems like there's just a lot of wild action there, and with the ongoing cross currents of the banking crisis, inflation concerns, recession concerns. So market just trying to digest all of that.
Yeah, I mean, it really seems like it's the financial weakness in the financial sector that is really kind of dictating the action in the market. I mean, we got a rate hike as expected from the Fed yesterday. They are pretty much done or close to being done with their rate hikes, and they could pivot as early as September. But right now, it's just about this just broad-based weakness in financial stocks. Still a lot of liquidity concerns out there. What fueled negative sentiment today was PacWest, PACW, liquidity concerns there, fears that might follow the same path as First Republic. So you can see PacWest down 50% today. Just seeing some big percentage declines, not only in the financial sector, but in a lot of leading growth stocks as well.
Yes. And we'll just quickly take a look at the Dow, now testing support at its 50-day line, threatening to close below that level here shortly. And if the weakness continues, who knows? We could see a bounce. And here's IWM now getting close to testing its lows from March. And we also want to take a look at, you mentioned the weak dollar. So here's a look at that. Not a whole lot of movement today, but getting rejected at the 50-day line earlier in the week. Gold sparkling here this week. We've been covering it for the last couple of months and monitoring the pullback daily for gold itself and a lot of the gold miners. It does feel like a couple days ago was the time to strike with a play here as it bounced and cleared recent highs and now is extending gains.
Yeah. So with the GLD, if we just go to the weekly chart here and just take a look at the weekly, I mean, you can see this is still kind of in the early stages of really breaking out of a big long consolidation here. So I look at the price move today and that move above the high from 3 weeks ago. You just had another handle form here. So it some might call it a little stretched here, but in a good, healthy, uptrending market, that 190.41 pivot would be a legitimate entry to me. So, yeah, you might want to wait for a pullback for gold stocks and be careful to chase them. And this one's up 3 days in a row, but still looking for opportunities in gold. You just want to be careful not to chase the stocks that have really risen a lot past proper entry. So GLD is kind of maybe a little bit extended, but still pretty close to that 190.41 high.
Yeah, I mean, you make a good point. The last couple of moves have lasted for a little while here, a couple of weeks in March. Before that, when it hit a bottom in November, we saw a run from November to almost the end of January. So we'll have to see if gold keeps it up, how far it may run, or if it runs out of steam here. We'll have to see, but traders in this will be sure to manage, or should be sure. I don't know if they will be sure, but they should be sure to manage their risk either way.
Yes, yes, absolutely. And it seems like the fundamentals around gold right now, with the dollar weak, the threat of the persistent threat of inflation, and it just seems like gold could have some more left here. Doesn't mean it could pull back in light volume. Maybe you get a better time to enter, but overall, the fundamentals, it just seems like gold could be a safe haven here amid a lot of market uncertainty.
All right, and now a quick look at 3 stocks of note. Here's Shopify exploding higher on its earnings report, Ken.
Yeah, so this is a stock that was actually really pretty close up to its high, near 60 late in the session, and that was kind of an anomaly because a lot of these gaps up faded pretty badly. So a little bit of selling came in late in the day, but still a really powerful move here. You can see revenue up 25%. Their gross merchandise volume was up significantly. So this was a solid move, and rather than chase the gap up here, Shopify is showing right now that it does have a potential to be a new leader in the technology sector. It's going to need a healthy a market acting more healthy than it is now. But a good one for the watch list. See if this one can hold gains and kind of trade sideways and maybe give you a better entry into the stock.
All right. And next on our list, we want to take a look at LNTH, another strong move on earnings. It broke out of a cup with handle a couple of months ago in mid-March, to be exact, pulled back to the 50-day line, and now a big bounce off of that level on the report, which showed some pretty strong numbers, a bit of a slowdown from the huge triple-digit numbers it had been seeing, but still is solid nonetheless.
Yeah, I mean, I'm not sure that Lantheus is going to get back to this, triple-digit earnings and revenue growth. Investors kind of got used to that, but 52% earnings growth and 44% revenue growth. They also not only gave guidance for Q2 that was above expectations, but full year earnings and revenue also above expectations. So here again, going to the weekly chart here, and you can see this just looks like it's in the early stages of breaking out of a big long cup with handle base here. So again, risky environment for growth stocks right now with the market under distribution, but this is another name that still has some potential here and pretty good growth prospects. So put it on your watch list right with Shopify, and just respect the strength that the stock showed today. Again, when on a day when a lot of earnings gaps really didn't look too good by the close, but Lantheus managed to close in the upper half of its range, so showed some strength.
That it did. And of course, with all the strength in gold related stocks, we need to take a look at a gold miner. And so here's ticker AEM, Agnico Eagle Mines, with an RS line of blue dot as it broke out of a cup with handle today.
Yeah, I mean, just a good visual example of a cup with handle base here, 59, 53 pivot here. Handle drifted lower in light volume. Look at how it formed the right side of that base with good volume, and then yeah, the handle forming on the weekly chart here with a relative strength line poking into new high ground. To go back to the daily real quick,
Sure.
and as the right side of this cup base formed, look at all the volume as it was working its way higher. So a stock that was under accumulation as it ran up close to that 60 level, sellers got shaken out of the stock, and that paved the way for a nice heavy volume breakout today. So to me, it doesn't look too extended. It is sitting, quite a ways above its 50-day moving average, but this still looks like it could be an early stage breakout.
All right. Well, thank you so much, Ken. And thanks everyone for tuning in. We've got Swing Trader Scorecard, our monthly webinar breaking down swing trader performance. So if you are a member or a trialist, head on over to swingtrader.investors.com to get the link and sign up and get access to the webinar that's starting at 4:30 p.m. Eastern. So very soon. I will see you there along with the Swing Trader team. Thanks again, Ken, and the crew. Will see you all tomorrow morning on IEBD Live. See you there, everyone.